Hangout. Great to have everybody here. Gordon McCallum, our regular moderator, is I think he's not back to school, but his kids are back to school, so he is in orientation today. So that's great. We're going to miss him. We're kind of going in circles here without the great Gordon McCallum moderating. So I'm going to do my best, and we'll carry on with the chat. So I'll go from my left to right. We've got Conrad DeJong joining us. He's a broker out here, actually in White Rock, British Columbia, close by to where I live. And thanks for joining us, Conrad.
Thank you.
All right. From there, Jackson Middleton, Regina, one of our usual suspects. Morning, Jackson. How's it going?
Hello. Good morning. I am good.
And we've got Paulo again. He's from Toronto. Good morning to you.
Hey,
nice
how's
sunny,
it going, Scott?
Good.
Yeah,
looks nice and
beautiful
nice
out here
sunny
actually
out there.
today. It was raining on Tuesday, but it's been really nice the past couple of nights.
Good stuff. And I'm going to get this right this time. We've got Rob Campbell in Guelph, Ontario. Good morning, Rob. Apologies again for last week for screwing up your name.
That's okay, Scott. Good morning, everybody, and welcome, all viewers.
Good stuff. So a couple things we're going to touch on here. We kind of were talking about last night on Twitter. I guess obviously the only thing kind of consistent in this industry is change. Couple of things that are coming up, obviously, changes to the homeowner's line of credit. And there's also a couple changes to the cashback mortgages happening at some of the lenders. So we kind of touched base before we went live here about the HELOCs. I know, Conrad, you mentioned last night on Twitter, you were talking about that a bit. Are you going to kind of see any effect on your business with these change? Maybe explain what the change is, and then maybe if you can let us know how you kind of anticipate what's going to happen with your business.
Sure. Well, as you know, the government changed the maximum loan to value from 80% down to 65% now for home equity lines of credit. And that has taken effect for most of the lenders in Canada. There's probably a few that are waiting out a day or two before they change their policy. For our business, I don't see a whole lot of change because we were already noticing, excuse me, the banks were, especially on some of the self-storage properties, where it's not hard to punch into the 1 million to 2 million level, where there was not a comfort level for them to go up to 80%, say, on a $2 million house already. So some of those were already maxing out at 50% loan to value. So for those watching, that would mean a maximum of $1 million that they would allow on a home equity line of credit. So going to 65, I don't see it being having a huge impact on our market. I think it might on some smaller markets or areas where the values aren't as high, and there was more of a comfort level with the lenders to go that high. But I honestly can't say that I went to 80% on a lot of product. There was already resistance, in the last 12 months to go that high, unless it was a really strong application. So I'm not anticipating a huge change in our area for sure in Vancouver, Greater Vancouver, other than maybe, like I say, some of the areas where the values aren't as high as like Vancouver proper, Richmond, South Surrey, White Rock.
Yeah, I mean, touching on that, I'm kind of the same. I didn't do a lot of HELOCs either. Very few actually over the last 4 years. So I'm not going to notice probably a huge difference. I think where this is probably going to affect, and I mean, we probably don't really need to discuss this a lot, but I mean, a lot of the times a HELOC was kind of done after the fact. We might have placed a mortgage at a branch or something, and the clients might have got that after, totally after the fact, and we're kind of out of that loop. So if anything, with these changes, that option is going to be not available. So obviously clients might have to go to a bit more secondary financing for that, B lenders, second mortgages, etc. I mean, I know, Paulo, you kind of deal with a lot of that kind of market. Are you seeing an increase in second mortgages kind of happening?
I haven't seen anything yet, but I could definitely see the demand going up, probably a lot towards private mortgages and stuff like that. I know a lot of people, at least in the Toronto market, tend to use their houses as an ATM. We've seen rapid appreciation in home values. So a lot of people have been really using that opportunity to take money out of their home and, I hate to say it, buy things they don't need. And I think a lot of that's going to slow down. A lot of people are probably going to need second mortgages because I do have lenders that go up to that 80% range still that HELOCs used to go up to. So I definitely think there's going to be an increase. It hasn't been right just yet because I think there still hasn't been that urgency, but I think it's coming. Yeah, definitely.
Good stuff. Jackson, anything you wanted to add to that? I don't know if you had any thoughts.
Well, yeah, I mean, it's obviously going to affect those brokers that do this with financial planners and stuff like that. And, I mean, the kind of the Smith maneuver stuff. And, I looked at that a few years ago. But, I mean, primarily my business is first-time home buyers. And the only time that I've ever really used a line of credit is if we got a parent in a co-signing situation and say, well, hey, why don't you put a line of credit against your property and, gift them 20%, avoid some CMHC fees, kind of put something together creative like that. But honestly, with rates as low as they are, I mean, you get a HELOC at what, prime plus a half, prime plus one, you're at 4%, whereas we could do 2-year money at what, like under 3. So it just, for me, in the last year and a bit, I haven't even done a HELOC. I don't even deal with a lender who has one available. So it's really not going to affect me. Could it go forward? Is it going to affect us? Well, I don't know. I don't know many brokers that make their entire living on this. It's a good option to have to, be more well-rounded and service our clients. But honestly, I don't even use them, so it's a moot point to me.
All right. Well, touching on that, we can kind of, obviously the changes are here. They're starting. I believe, from what I've been reading, it has to be kind of implemented with lenders before the end of the year. That's kind of what I've kind of read for the most part. Touching on that with interest rates, though, obviously yesterday, it's kind of like not even worth even talking about this either. It's funny. Bank of Canada, no change to rates, right? No change to rates for the last 2 years. So, obviously, like you're saying, line of credit, with the premium charge there, yeah, it's better off to kind of go into a fixed product, a bit more security for people, I think, for sure, as well. Other than that, Rob Campbell, you doing a lot? You don't do a lot of line of credit either, I'm guessing, or are you mostly first-time buyers?
I don't do any line of credits. Primarily first-time buyers or second-time in. But I mean, everybody covered the most solid points. I mean, I think this is going to affect maybe a little bit more of the investor side of brokerage.
Scotty, you don't have video right now.
There we go.
Scotty, you don't have video right now.
There we are.
There we go. There we go.
Scotty, you don't have video right now.
There we are.
There we go. There we go. We got. Now I think we're still broadcasting, so it's weird. I got kicked off the server, so. There we go. There we go. We got. Now I think we're still broadcasting, so it's weird. I got kicked off the server, so.
I think we're stuck in a little bit of a loop, guys.
Now I think we're still broadcasting, so it's weird. I got kicked off the server, so.